Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, April 11th, 2019. It's 12:51 p.m. Eastern Time as I'm starting this video, and I'd like to do an update actually on the cannabis sector. Just recently did a video on March 26th, so it's only been a couple weeks, and I wanted to do an update there. For a couple reasons. I'm not actively engaging this sector, but I know there's a tremendous amount of interest on the site. I see it in the trading room. A lot of traders either actively trading, swing trading the cannabis stocks, or investing in those. So, and it's a sector that I've actively engaged on and off over the years. For the past several years, we've had many trades, done countless videos on these, and so it's a sector that at times when the momentum's there, you hit it, it moves fast, and then you get out and wait for the next setup. So that's why I'm doing this video. You can see on this chart here that like any other sector, you get these divergent highs, and that usually ends an uptrend. You get a divergent low that sets up for a uptrend, and wash, rinse, repeat. ADL just means almost divergent low. We didn't exactly have the divergence because we made a slightly lower low, but compared to prices, we're making much lower lows, and so that's why I call it an ADL, almost divergent low. And then most recently we had this divergent high. So let's just focus on what's going on now. I still think this sector is at this point in time overvalued and overhyped. Long-term potential certainly in a lot of these companies, but as I said a few years ago, you're going to see, and this is again 2-3 years ago before it was legalized in Canada and half the states that it's in now, I said it will be a tremendous growth sector, and was bullish on almost all the names, and still said you could tuck them away long term. But I said you'd see a shakeout in the sector, and we've seen that. So a lot of the companies that were popular trading vehicles a few years ago are gone now, or they're just mere penny stocks, and the big names are surviving and really, or I should say, evolving. And so we'll get to those. I'm going to stick with just most of the higher quality, the bigger names, and again, I would say higher quality. It's all relative, obviously relative to the sector. All right, let's just talk on the technicals. So right here we had a divergent high recently, and so far we've been correcting off that divergent high. I am open to the possibility, and I think it will have a lot to do with what the broad market does. This is very much a risk-on, risk-off type sector because these are still companies in their infancy. It's an emerging sector. In other words, many of these companies aren't even profitable yet, and those have very high valuations. Now, again, that's why you have these big volatile swings, and let's just talk about MJ, which is the ETF, and then we'll get to some individual components. So what I see here is we have a divergent high, and that could have done the trick to put in. When I say done the trick, just like these two divergent highs here and here that ended the run and set up a big correction. If so, we're going a lot lower in the pot stocks. Now, I can also see the possibility, and I think it'll have a lot to do with what the broad market does here in the next few weeks, that we come up. And this is one reason why I do not have this on a short. As an official short trade. I shared those thoughts before. We're coming up on support, 34.50. That is my first target, and I think that'll be hit. Not enough really meat on the bone left at this point to short it. And if that goes, you can see my additional potential targets and support levels. They're all labeled here. If we happen to get another lift up, which is possible, you can see it would simply extend the existing divergences that are in place and then set the stage for a deeper correction. And that is why I'm doing this video. If you're in the sector, do an overview on some of these companies as well as MJ, and tell you that we may or may not get that. And again, I think it'll depend largely on how much more upside is left in the broad market. If the broad markets roll over soon, you'll see everything going back to a risk-off trade. Treasuries, gold should do well, and lower quality stocks, speculative things such as marijuana stocks will probably underperform, and you'll probably see some or any or all these targets be hit. So that's MJ. Let's just dive into some of the top components. SWM, or let's do it this way. Hold on one second. Let's look at that last video here. Let's see if I can clean that up. Higher quality, clean the quality up. It's still a little blurry, but you can make it out. So when I did the video back a couple weeks ago, we had the divergent high, and we were also at resistance. So that was a little more objective for shorting up there. 37.26 resistance. So you can see we've moved down, and we're close to that first target now. So the divergences again have been playing out since that divergent high. The next one we covered in that video was ACB. That's that. Always was and still is one of my favorite long-term stocks. Let's look at ACB. Okay, here's ACB. That was then, and we'll do this is now in a second. This is from March 26, and I was highlighting this trend line right here, saying this would give us a sell signal if we broke it. So again, that was then. This is now. We have broken that trend line. We went on to break it. Back testing, not impulsive so far. And I'm looking at the posture. I don't see anything scary. So this is one that, although it can certainly go down lower, that is a sell signal. It's not really a confirmed sell signal. I don't see any impulsive selling. I see support still here at 844, but I certainly wouldn't go long. And as I mentioned, if you were long that one, you might want to have a stop below that line. Now we've already taken it out. So a 921, give or take. I'm going to move that line up just a bit there. Call it about 930 now. That's resistance. It's a minor resistance level, but if ACB can get back above there, it regain the trend line. And again, whether or not it plays out this way will depend most likely what the market and MJ does. If MJ goes on to put in another high and extend the divergences, I think you could see this. This may prove to be a false breakdown in ACB. Come on, put in a divergent high, and then have the big correction later. That would, again, we don't have divergence right now. Only potential divergence with a lot of work to be done. It would look something like that. Unless that happens, a breakdown's a breakdown. Support is support unless broken. It is broken support. Now that becomes resistance, the trend line, and so does 932. So this one's in a precarious position. Like I said, my convictions aren't high enough to short it. I'm just passing this along. If you're in this one for levels to watch, 844 if you want to give it a pretty wide stop, and you kind of really need to run wide stops on these because the daily price swings are high. If you run a 3-4% stop on these stocks, just go home. Don't even bother. You're going to get stopped out on the daily grind. These things move up and down 3-4% in a day. You're swinging for, shooting for high double digits, even triple digit gains on this stock. That's what the trends are. The trend from right here on the bottom, that was a 117% rally. The trend from right here was a 200% rally. So that you just kind of put that in perspective and keep your position size small if you're in this one for the long run. Otherwise, you'll just get shaken out on the day-to-day grinds. So that's ACB, and again, one of the bigger names in the sector. So definitely worth watching. Next up, I covered GWPH, GW Pharmaceuticals, highlight boxing in the range. This is from the video. Nothing's changed on that one. We don't really, here, let me pull it up. GWPH, here we go. And still within that range, so there it is. Like I said, looking at the posture of these indicators and everything else, RSI is still above the 50 level, that's bullish. The PPO is above the 0 level, that's bullish. We're poised to make a bullish cross. Anything's possible, but recognize this for what it is. This is a trading range, consolidation. An upside break could be bullish, although like the stock market, if we broke out to the upside soon and we put in this divergent high right here like this, the way I'm drawing this, you'd have negative divergence, you'd be overbought, and if so, that would likely prove to be a false breakout. So this is one, although it's pushing, trying to break out to new all-time highs, I personally would be skeptical and wouldn't be chasing that breakout to new all-time highs because of this right here, everything else I'm seeing. Next up in the video from a couple weeks ago was CRON. Again, this is a screenshot of that video. I was highlighting two things. This 1870 level on this uptrend line, rising wedge pattern, negative divergence. There's an example of a stock that broke out the new highs, but has poor technicals, bearish technicals. And so let's fast forward to today. And boom, we broke down. It's two sell signals. We broke 1870 support. We broke the trend line as well, and we've been moving lower since. So this one's already given up. What, 15% or so? I don't know where exactly it was. I'm just rough measuring with the measuring tool. 50 days starting to roll over. This one is clearly, to me, in a bearish technical posture. Anything's possible. If the sector gets another lift, then what you'll probably see with this one, or you may see, is a back test of the trend line, recovery 1870. But until then, as I like to say, resistance is resistance until unless taken out. So you have both two recently broken support levels, which become resistance, 1870. The trend indicators, PPO signal line, the zero line, is clearly now below the PPO 9 EMA signal line is below the zero line, denoting a bearish trend, and the RSI is well below the 50 level, but not yet anywhere close to being oversold. So CRON right now, near-term outlook is bearish. That would be my first target down here at 1319. Okay, next up in that last video was CGC, Canopy Growth Corporation, another big one, beloved by cannabis stock traders. I highlighted that one being a symmetrical triangle pattern. Those patterns are neutral. They can break either way, and you need to respect whichever direction they do break. So the trend at this point in the video probably starting to become apparent to you. A lot of these stocks that I highlighted recently have broken down. MJ's continue to move lower. This one, as clear as can be, and these charts have not been edited. Breakdown, back test, perfect back test of the triangle below, and it's been moving lower. So in this one, we've already dropped about 10-11% since that last video. That would have been your stop loss order or air level to short if you wanted to short this one, and you would have been profitable. And again, don't underestimate just how much these things can drop if the tide has indeed changed. If I had a little more confidence, I'd throw these on as official trap, but you got to be careful with these. These don't really, they're not suitable for a lot of traders, investors, if you're new to trading investing, because they move so much, and they can really get against you. So I pass this along again because I know a lot of you are actively investing or trading in this sector, and when I see compelling setups, I'll pass them along. Once in a while, I've had a couple of pot stocks as official trade ideas in the past, but I try to limit that because of their extremely aggressive and speculative nature. Okay, next up from the video was TLRY, Tilray, and we had this downtrend line right here. We still have it. This is again from the screenshot from the video. 63.90 being support right there. That was then. This is now. TLRY took out 63.90, and it's been moving lower since. So that's again one more check mark to the bearish camp here for the pot stocks. A lot of them breaking support recently, and of course the downtrend line tells you that the downtrend line is intact unless it's taken out. So if you're looking to go, next long entry would be a recovery of 63.90, but more important, you need to see that trend line taken out as well. Until then, the trend is your friend, and it's saying right now that is down. Okay, next up in that video from the 26th was TGODF, the Green Organic Dutchman Holdings. Pointed out some, the island top right there, telling you that's a bearish sell signal there. When you have a gap up followed by a gap down, that's an island cluster top, and then next sell signal would come on a break of this trend line right here. Let's fast forward to today. There it is. So we've continued lower from there, dropped about another 15% from that point, flirting with the 50-day moving average now, but still below trend. PPO signal lines above there, but price comes first, then volume, and the indicators, everything else. So right now this one has broken trend recently, and again, it all depends on what the sector does. Most likely birds of a feather flock together. So if the marijuana stocks do get another thrust up, maybe you look for a back test here. Also 378 is resistance, give or take that level. That's a pretty important resistance level too. If you look at the chart here, I don't know if I harped on that one last time in the video, but let's grab this here. 1, 2, multiple reactions there, 3 reactions there, 4, breakdown, impulsive selling. So you can see all the reactions along that level. So this one has some work to be done. Bullish obviously could take that out, but that might also come in and backtest that trend line. So right now the technical posture is clearly bearish on this one. Okay, next up I covered CTST, CanTrust Holdings. And I had said this chart clearly stood out to me. It just trades so well. I've talked about all the divergent highs, lows. and said this one just put in a divergent high, and a break of that trend line would be our sell signal. And I said, clearly bearish to me, and you could maybe tuck it away if you put a stop not too far above and ride it all the way down here to 480. So that was at what, 961 back then. As of today, we got, there's your breakdown, and that stock has dropped about roughly 25% so far. Yep, yeah, about 25%. So congrats to those that caught it. I will say the breakdown came on a gap down, but even then, when you're looking at a stock that has so much potential, 10, 12, whatever it was % gap down, there's my target 480. And as you can see, this has been nothing but bearish price action so far. A gap down, I talk about breakouts of chart patterns, whether it's a bullish chart pattern, breakout to the upside, or a bearish chart pattern. This one was our trend line, was our first sell signal, and then we pushed up in this minor price channel here. We had a minor uptrend line, and again, that was your next sell signal. So the only thing more confirming than a big red candle on a breakdown is a gap. A gap, although there's no candle there, don't let that black void fool you. There's nothing more impulsive and more bearish than a gap. Why? Well, a red candle, let's just say you broke down and then you started selling. It lets rapid quick traders out. It lets those that have a stop loss, let's just say you were trading this stock and you had a, you saw the bearish developments, but you said, you know what, sometimes these things keep going, so you had a little stop loss set right below the trend line in case it broke. Well, gaps burn all those long traders. They get burned, and it denies entries to shorts, which actually makes it a little more bearish because you don't have a lot of short interest in the stock. So the longs get burned because stops are bypassed on a gap. There's two types of stop loss orders: stop limit or a stop loss order. A stop loss order will fill at the open. So on that one, in that case, the stock opened that day at, here you have to put the crosshairs on it, pop up. It opened at 890 after closing the previous day at 1004. So that's that's well over a 10% gap. And a stop loss order would have been filled at 890 on or around the open, because they convert into market orders at the open or once the price is triggered. And a stop limit order, well, that's actually can be worse, and it is worse usually, because a stop limit order, say you had one right here, gets bypassed and it will only fill at the limit price. It's tough when you're trading stocks that have a big history of gapping, because if you had that stop limit order, well, guess what? Okay, you got gap down here, your order is still open, you're still long the stocks, you're saying, okay, maybe I'll get back to where I was. Well, that's hope. Hope doesn't work so well in the market. Sometimes it does, sometimes it doesn't. What happened is your losses continue to mount and will continue to mount if you're, or likely, and just have those losses build. So you got to make that tough decision when a stock gaps against your position. If you, like I said, if you had a good to cancel stop loss market order and a regular stop loss order, you would have already been out and the pain would be over at least by now. Now it's taken out at 739 impulsively today. That was support. It's now resistance. So, back test to that level might offer the next shorting op on this one. But again, I think this one has a possibility to go back down here to 480, especially if the sector doesn't kick back and make that additional new. Okay, next up in that last video was HEXO, Hexo Corp. Obviously you can see I just did a wash rinse repeat thing. 1, 2, 3, 4 divergent highs over the last 2 years. This one most recently here, sell signal pending on a break of 609 and or the intersecting uptrend line. You want to wait till the last of the two go. So that was then. This is now. We've broken the trend line, but you can see not very impulsively yet, and we still have that 609 support. So that's sell signal number 1, and the next sell signal or objective short entry would come on a break of 609. It's pretty significant support, so I feel pretty good if that level went with conviction. It was support here. Once broken, you had a meltdown type sell-off. We came to back test it, failed. That helped to validate the level. We finally broke above it on a gap and then ran, and we're dancing on it now. So at this point in time, it's not an objective short, even though we just broke down, or at least a partial position, but I wouldn't bring it to a full position until we get there. And again, keep things light, because a lot of these, whether or not these scenarios are going to play out like this, will of course depend first and foremost on the pot stocks as a whole, but also I think to a good extent the market, because if we go to new highs and we start burning through those divergences and we break out and keep going after that, it'll be risk on again, and everyone will want the pot stocks. Otherwise, if everything melts down, they want to get out of the risk off or risk on assets, and this is one of them. Next up was APHA, pointed out, I guess I was drawing because we didn't have it. There must be potential divergence if we kick back there. But I believe, and I haven't listened to the video today, but I think I would have been highlighting this 927 support level, saying a break of that would be a sell signal. Otherwise, support is support until unless broken. So if we push back up, look for resistance at 1082 and potentially a divergent high if we clear that. Let's see where this one has gone today. Nowhere, still between. It's in no man's land between support and resistance. So you have the 50-day moving, curling up, supporting it from below, as well as 927. An impulsive move down, probably be a quick run down to about right here. Let me tweak that target about 774. And again, you have resistance up here at 1082. Might provide an objective shorting entry if the sector still looks bearish at that point in time. Even if we get a break above and get that divergent high, if we get there, and again, it can also look bullish if these divergences get taken out, but it'd take quite a bit to take these divergences out. The indicators are really lagging. So there's APHA, that is. And then finally in the video I covered at the end, CRBP. I'm not even sure, well, maybe they just as components of MJ, but there's not a lot there. That one's in really smack in the middle. Trendline support here, resistance overhead. Let me just pause the video and see if there's any other pot stocks that stand out that I haven't covered. Again, this completes a review of the last video, the ones I covered there. And again, these were, the reason I covered it, by the way, these were the 10 largest holdings at MJ. So where the 10 stocks I go, and I showed you clearly, on average, they've all either broken down or poised to do so, close to it. So at this point in time, the charts appear bearish. There is a potential to get another thrust up, maybe back test, and still have the bearish technicals play out down the road with another thrust higher. But who knows? Again, I said that'll probably depend a lot on what the broad market does as well. All right, as we wrap up, I'm going to rifle through the list. This is populating the holdings of MJ, even though I went through the top 10. Just go through here. SWM, paper products, so my guess, rolling papers. I don't know. You can look up that company. It's this one actually, I don't know, cross between, you have a downtrend line here and an uptrend line there. Pop above that would be bullish. So that's one of those many indirect plays on the cannabis sector, by the way, guys, like REITs that rent out the land for the growers, or, in this case, again, it's just my guess that they sell rolling papers, but who knows. GWPH, I already covered that one. I covered ACB. Cara, one of my favorites back, a couple years back, and recently I said if it popped this level, I posted in the trading room, we're here, it had some either clinical trials or earnings, and I said if it popped above here, 21 would be my target, and it's effectively hit that, reversed a hair shy. As I say, I always set my sell limit orders. I wasn't in this one, but I mentioned in the trading room that would be my target. Ride it up to 21 if it broke above this level right here, and it did so, and that's been a quick ride for about an 18% gain. That was just a few weeks ago. So I think the run is probably over in Cara for the time being. So hopefully, for those of you that took it, and I know a few of you were long, maybe you were able to take profits, and maybe it continues on up. You can certainly let it ride. Sometimes these things keep going, but there's an uptrend line you might want to watch if you didn't take profits at 21 or close to it. Again, don't try to milk every last penny. And these are volatile, so don't go in 2 or 3 cents. You want to use maybe 30 cents or so shy of that level. And if it breaks that, probably coming back down here, there's a big gap to backfill right here. About 1828. Cara is also an indirect play. It's a biotech, but they have a lot of cannabis-based drugs in their pipeline. XXI, 22nd Century Group. I don't see anything I want to talk about there. Philip Morris, big downtrend line. The big alcohol and tobacco companies in panic mode, invested big stakes in all these companies, and I think they overpaid, but we'll see. Time will tell. Anyways, I don't see a lot on Philip Morris to talk about. Although they had big, they had big divergent lows, Altria and Philip Morris, and they played out. Those divergent lows played out. This one looks to be flagging right now. MO possibly bear flagging, but again, I don't have a strong opinion on that one. Cron I already covered. TPB, there's one. Turning Point Brands, tobacco company that must have a stake in the cannabis stocks. 42.59, dancing on support right now. Breaks that. You have a trend line here that it may want to come in and visit. Hasn't visited that trend line in quite a while, and my guess that sooner or later it will. CGC I already covered, Hexo I already covered, Tilray, APHA I covered, UW I don't see a whole lot there worth mentioning, SMG, Scott's Miracle-Gro, the whole fertilizer component, you know, that's where they benefit from the cannabis sector. I don't see much there worth mentioning. ARNA, CRBP I already covered, VGR I don't see much, INSY, resistance at 493. It's a biotech stock, and that's it. All right, guys, we'll wrap up here. So that's the top 10 that I did an update on, and then a few others in there that, again, some indirect plays in the cannabis sector. But as of now, you know, there's nothing wrong with shorting it if you're, you know, somewhat aggressive trader. Going back to MJ, you know, just at this point, it's hard because the most objective entry was when I did the video before at 37.26. Right now, you're in no man's land. You're coming up on the first target, so you might have to use a little bit wider stop than you might have normally right here, and just let it ride. If you want to know where it could be going, if these divergences play out and we don't have another thrust higher, you know, possibly, I don't know, it's hard to say right now, but quite possibly all the way back to this $28 level. These are all potential targets, but I could just tell you right now, an ideal swing target where you're probably going to get a reaction, 32.90, and that would give you another, on the ETF, about another 6% downside, and maybe all the way down here to 31.57. And that's almost a little better than 9%. We'll wrap it up here, and if anything compelling changes in the pot stocks, I'll do an update on them. This has been Randy Finney with Right Side of the Chart. You have a great day now.